Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host here at AlgoBot, and today we're exploring a strategy called von Neumann Ratio Trend. This one blends a classic statistical idea with straightforward breakout trading. Over the next few minutes, you'll learn what the von Neumann ratio actually measures, how this expert advisor uses it to judge whether a trend is smooth enough to follow, and exactly how it decides when to enter and when to step aside. Everything here is for educational purposes only. So let's get started. So what is the von Neumann ratio trend expert advisor at a high level? It's a trend continuation strategy that only acts when the price path looks genuinely smooth. The engine behind it is the von Neumann ratio, which is the Durbin-Watson statistic applied to price itself. In plain terms, it compares how big each bar-to-bar step is against how far price has traveled from its recent average. When a market is trending cleanly, each step is small compared with the overall distance covered, so the ratio collapses to a low value, often well below 1. When a market is choppy and whipsawing, each step is large relative to a modest spread, so the ratio climbs toward 2 or higher. This expert advisor treats a low von Neumann ratio as permission to trade and a high ratio as a reason to stand aside. On top of that smoothness filter, it adds two familiar building blocks. First, it measures net displacement over a look-back window to decide direction, up or down. Second, it waits for a breakout, a close beyond the high or low of a recent price channel, before committing. Because it combines a regime filter with a breakout, the strategy is designed for markets that can produce sustained, orderly moves rather than tight, noisy ranges. It runs on a single symbol and a single time frame, and it manages just one position at a time for its magic number. It can trade both long and short, and opposite signals flip the position around. This style tends to suit traders who are curious about market regime thinking and who prefer a rules-based, systematic approach over discretionary decisions. As always, this is an educational breakdown of how the code behaves, not financial advice or a recommendation, and trading carries real risk, including the risk of loss. Let's walk through the exact logic the expert advisor follows, step by step. The strategy works on completed bars, so it evaluates its rules once per bar, when a new bar opens and the previous one has just closed. It also needs enough history on the chart before it does anything. The first gate is the regime check. The strategy computes the von Neumann ratio over the last 40 closes, which is the VnrPeriod setting. It sums the squared differences between each close and the one before it, then divides that by the sum of squared distances of each close from the window's average. If the result is invalid, or if it sits at or above the persistence threshold of 1.10, the strategy stops right there and does nothing. Only a ratio below that threshold, signaling a smooth, persistent path, opens the door. The second step is direction. The strategy looks at net displacement over the trend period of 30 bars, comparing the most recent close with the close 30 bars earlier. If price is higher now, the bias is up. If it's lower, the bias is down. If there's no net change at all, it passes. The third step is the breakout. The strategy builds a channel from the highs and lows of the preceding 8 bars, the trigger look-back window. For a long, the bias must be up and the just closed bar must close above that channel's high. For a short, the bias must be down and the bar must close below the channel's low. If neither condition is met, no trade is taken. So an entry needs all three ingredients together: a smooth path, a clear direction, and a fresh breakout in that direction. When a valid signal appears, the strategy sizes its risk from the average true range over 14 bars. The stop loss is placed 2 ATRs from the entry price, and the take profit is placed 3 ATRs away. That's a reward-to-risk ratio of 1.5 to 1, defined entirely by current volatility rather than a fixed pip distance. Finally, position management. The strategy holds just one position at a time for its magic number, and it operates stop in reverse. If a long signal appears while a short is open, it closes the short and opens a long. If a short signal appears while a long is open, it does the reverse. Both the stop loss and the take profit are attached to the order when it's sent, so every trade always carries a predefined exit. Let's look at the actual meta-editor code that makes this work. At the top are the input parameters you can adjust in the strategy tester or on a live chart. VnR period is the window the von Neumann ratio is measured over, set to 40. Persist threshold, at 1.10, is the ceiling the ratio must stay below before any trade is allowed. Trend period of 30 sets the direction window, and trigger lookback of 8 defines the breakout channel. Then we have the ATR period of 14, along with the stop multiple of 2 and the target multiple of 3, and finally the order volume in lots. Below the inputs is the decision logic. First, the code computes the von Neumann ratio and returns immediately if it's invalid or if it isn't below the persistence threshold. Then it measures net displacement to set the bias up or down, and it reads the just closed bar's price against the channel high and low. Now the two signal blocks. The buy condition is true when the bias is up and the closing price clears the channel high. When that happens, the code reads the ask price, sets the stop loss 2 ATRs below it and the take profit 3 ATRs above it, and calls trade.buy with the tag VnR long. The sell condition is the mirror image. It's true when the bias is down and the close breaks below the channel low. The code reads the bid price, places the stop 2 ATRs above and the take profit 3 ATRs below, and calls trade.sell with the tag VnR short. Notice how both sides use the exact same ATR-based distances, just flipped in direction. Let's bring the strategy to life on a chart. At the top, you can see the price candles with a breakout channel drawn around them. And in the panel below sits the von Neumann ratio, our smoothness gauge. The dashed line marks the persistence threshold at 1.10. Remember the rule. The ratio has to sit below that line, in the green smooth trend zone, before the strategy will even consider a trade. Look at the first few candles on the left. Price is drifting sideways in a tight, choppy range, ticking up and down without getting anywhere. Watch the panel below during this stretch. The von Neumann ratio is riding high, up near 2. That's exactly what the statistic is telling us. The bar-to-bar steps are large compared with how little the market has actually traveled. The path is jagged, so the ratio stays above the threshold and the strategy simply waits. No smooth trend, no trade. Now watch what happens over the next several candles. Price begins to lift in an orderly, step-by-step fashion. Each candle closes a little higher than the last, with small overlaps and shallow pullbacks. As this clean advance develops, the von Neumann ratio in the lower panel slides down and crosses beneath the threshold into the smooth trend zone. The market is now traveling far relative to the size of each step, and that is the signature of a genuine, persistent move. With the smoothness gate open, the strategy turns to direction and to the breakout. The net displacement over the direction window is clearly positive, so the bias is up. On the marked by candle, price closes above the upper channel line, clearing the highs of the preceding bars. That is the fresh push the strategy has been waiting for. The buy entry marker appears right there, where a smooth up path and an upside breakout line up together. From there, the strategy sets its protection. The stop is placed a couple of ATRs below the entry, just under the recent structure, while the take profit is set 3 ATRs away, giving a reward to risk of roughly 1.5 to 1. Price continues its orderly climb, candle after candle, and reaches the take profit target. The long trade closes at the take profit marker. This is really the heart of the strategy. Plenty of breakout systems get chopped up because they act on every push through a recent high, including the ragged ones that immediately fail. By insisting the von Neumann ratio confirm a smooth path first, this approach is trying to sit out the jagged, whipsaw breakouts and only participate when the underlying move has the orderly character of a real trend. Of course, no filter is perfect, and smooth paths can still reverse, which is exactly why the ATR stop is always in place. After that peak, notice the character of the market change. Price stalls, rolls over, and the von Neumann ratio briefly pops back above the threshold as the move loses its smoothness. The strategy stands aside again while things are unsettled. Then a second clean move develops, this time to the downside. Price steps lower in an orderly way, and once more the von Neumann ratio drops beneath the threshold into the smooth trend zone. Now the net displacement over the direction window has turned negative, so the bias flips to down. On the marked sell candle, price closes below the lower channel line, breaking beneath the lows of the preceding bars. The sell entry marker appears there, a smooth down path confirmed by a downside breakout. For this short, The logic mirrors the long exactly. The stop sits a couple of ATRs above the entry, and the take profit is placed 3 ATRs below, the same reward-to-risk shape. Price follows through to the downside, candle by candle, and reaches the lower take profit target, where the short trade closes. If, instead of following through, price had reversed against either entry, the ATR stop would have capped the loss, and an opposite signal would have flipped the position the other way. That is the stop and reverse behavior built into the code. And that brings us to the end of our breakdown of the Neumann Ratio Trend Expert Advisor. Today we unpacked what the Neumann Ratio measures, how a low reading signals a smooth, persistent path, and how the strategy layers a direction filter and a breakout on top of that smoothness gate to decide when to go long or short. We also walked through the ATR-based stops and targets and the stop and reverse position management, and we saw it all play out on a chart. Remember, everything in this video is educational content only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading involves real risk, and losses do happen. If you found this useful, please like the video, leave a comment, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.